Good evening and welcome to my midweek recap and plan ahead for Apple. Real quick, couple positions I have taken, what I've taken off. I'm still holding these July 210 calls from 28 cents back here. Gonna try and hold those for at least another week or two. See what happens. Squeeze as much out of them as I can. I'm only holding half the position I was in originally, so made the money. It's basically a free trade. Just gonna manage it and, like I said, try and reap as much as possible. Uh, let's see here. On Monday, finally closed out these 22 June 192 and a half, excuse me, 22 June 195 calls here. Once it looked like price was going to break below the 8 EMA and VWAP. Of course, in hindsight, should have held on a little bit longer. Could have at least come close to breaking even. But I did bail on those. Just reason being they were too far out of the money to be expiring next week. So I closed those out, got into some 22 June 192 and a half calls at 196. Essentially rolled them a little bit closer to the money, and that trade played out fairly nicely to start here on Thursday, and took half of them off at 225. Expected it to continue higher based on this big, huge green candle, but I should have known better. We are in the time of year where there's nothing but chop, so trailed me out the rest of those at 175. That trade ended up being a wash essentially. So here on Wednesday, I did end up taking one more trade. Price action did not like what the FOMC meeting was about. Didn't like the news that came out of it, whatever. Anyways, everything sold off. And what it looked like it was going to do, Apple looked like it found support here at the 8 EMA. Looked like a pipe bottom type of setup, which is a reversal pattern. So I did take some 29 June 192 and a half calls here at 249, right on this bar here, and closed me out at the end of the day once it rolled over and came all the way back down. Looked like I was going to be able to hold it overnight, but just had to manage my position and obey my stop level. So a little bit further than I would have liked it to have dropped, but tomorrow's another day. Still have an opportunity to make some more trades. The daily candle over here is looking kind of ugly. It is a bearish engulfing candle, taking out almost 2 full days of price action and closing below the 8 EMA. Unless price action opens up in the middle and climbs higher, it's going to be a day for the bears tomorrow. Hopefully today was a trap day and we'll see some climbing higher, and I'll have another opportunity to take some long positions. I'm still going to maintain my stance on this bull flag playing out to about 215. What happens quite a few times with these flags is price action will come up, create the flag, break above, and then roll back through it, come down somewhere, find some support, and then continue higher. So this is ultimately a momentum position or a momentum pattern. Doesn't necessarily mean it's going to go straight up after that break, although the best ones do. It's still going to be bullish unless price action completely takes out all this price action, comes back down to 160, which is very far away. I'm not saying it's impossible, but it's unlikely from where we're at right now. So we'll just have to wait and see what happens. Now on to the trade plan that I have on the chart here for Thursday. And I'm probably going to have to put a few more levels on here, so I'm not sure that I have them all on here. I'm going to draw a line right here around 185 and a half, 186 roughly. And at that level, I will look for 185 calls, approximately 2 weeks out. Okay, now what I'm looking at is a retest of this area where this flag is. Now, just because I have this big green bubble here doesn't necessarily mean price action is going to be guaranteed to bounce off of that. Anytime I've had a level like this on a chart in the past, it's just an area of liquidity, a lot of buyers. So market makers, algos are going to see that. They may run through all these buy orders, take out stops below, and then start to reverse and start climbing higher, which is why I have this note here. Slide this over. If price action comes down, breaks below here, and starts to climb back up, once it reclaims that level, I will look at taking 187.5 calls about 2 weeks out in the future once it does reclaim that level. Anything below there, I'm still going to be looking at supports, not necessarily breakdown trades, because there's a lot of levels of support down below. Just going to stay on path with the trend. So below there, 185 calls, and still all the way down here at 50 SMA, 182.5 calls about 2 weeks out in the future, and way down here at the 200 SMA, I'll actually be in the money with this position here at 170 calls about 2 weeks out in the future. So those are the levels that I'm looking at. Any trigger into these positions in this range, I will look for a target ideally back up here at 194, but realistically, maybe 190 area, because now that it's broken, it'll probably have at least a little bit of selling resistance there, maybe even test this 191.5 level. So we'll see what happens with those trades if they do play out. If you have any questions or comments, please feel free to leave them down below. Have a good weekend and good luck.